Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market webinar. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, is for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer. And let's welcome Dimitri Pargamonic to the stage.
Good morning, Will. How are you?
Good. What are we looking at today?
I'm going to take a look at our option volume report. I don't know if you could see it. It's if you go to the main menu up top and under options, click on options volume. Like so, you'll get to this report, and we discussed this report before. Up top, you'll see some filters, and then below you have this data table with the option volume breakdown by symbol from a high level. And what I wanted to do is discuss some of the statistics below this table. So if we slide down below, now we get this summary of all the options volume in the market. And we'll just kind of go over this right now just to see what kind of insights you could get from here, because it's just a quick way to understand how people are using options and where the trading activity is in the overall market. Okay, so this is aggregating all the volume. And Will, there's a lot of background noise, I think, coming from your side right now.
All right, let me turn off my stuff.
Yeah, that's it. So here, from a high level, we see a summary here that Friday's volume, we're not open today. This is in the pre-market, so we're looking at it from the previous day's close. 90 million contracts traded, over 90 million compared to the average daily volume of 51 million. So we could see that if we aggregated all the option volume through in all the stocks that are available to trade options, it was much higher on Friday, and that's not that surprising because Friday was a big trading day with a large move. But we could come here and see in comparison by how much. So this was particularly very active options trading day in the market. 90 million versus 51 million on an average day. The split between puts and calls is 52% versus 48%. And that's seems pretty balanced, a little bit more in the puts. Out of all the stocks out there, we could see there are over 5,600 different symbols in our data table that have options listed and available to trade. 1,900 of them in 69. The volume was greater than their 30-day moving average. So there was more activity than usual in those 1,900 stocks. And then how are those option tradings concentrated? Where's the option flowing to? And how's it distributed amongst all these stocks? We have 5,000 different securities available for options trading. But where's that trading kind of concentrated? Where is it flowing to? So this gives us a little bit of insights on that the top 100 stocks represent 82% of the trading volume. So you could see it's very concentrated in a smaller segment, a smaller group of those stocks available to trade. 82% of all the trading volumes in the top 100 volume stocks out of 5,000, that's a small percentage. 18% of the trading volume goes to all the other stocks. The top 10, if we just took here, if we look at our data table, we could see here, these are right now sorted by the top 10 options volume. This is actually by notional. We could switch this. Let's do by just contracts. So if we switch this right now, these are the top 10 stocks by, hold on a second. Let's do this by trading volume. So you could see 15 million options contracts in SPY, 7.5 million in NVIDIA, 6 million in QQQ, and so on. So if we just looked at the top 10, 1, 2, 3, 4, all the way going down to 10, what percentage of the volume, the options volume, is concentrated in just those top 10? And it's important to understand that distribution of volume. And we could come down here and we see here that the top 10 represent 50% of all the trading volume. So you could see where, where and how people are using these options, and that half of the volume are only in the top 10 traded securities. Okay. What about the ETFs? We have different types of securities. We have ETFs. We have single stock securities. ETFs like an SPY or QQQ, and the single stock securities would be like an Apple or an NVIDIA. What is the breakdown of that? So if we took just all the ETFs, there are 1,800 ETFs. But if we just took the ETFs, we could see that 51% of the volume flows to ETFs. Okay. And those accounted for 46 million contracts, option contracts. So even though that the ETFs, there are less ETFs, 1,800 out of 5,600 securities, half the volume went to ETFs. Okay. But some stocks barely trade anything, so we have to take that into account. Here it tells us that 1,286 stocks that have options available had no volume. So even though there are stocks out there and market makers are producing bids and offers, and there are markets out there available to trade on, there's no volume on it. And this gives us an idea here, of how people are using options, and that so far we see there's a very big concentration of trading activity in a small group of stocks that are available to trade. And another thing out there is, where when we measure liquidity, and we see that there's 514 stocks out there that are only listed on one exchange. And that's important it could be important for market makers or people who are looking to add liquidity. So there's trading strategies that are based on adding liquidity to places where there might not be a lot of liquidity, and looking to make theoretical edge in the trading volume, because when there's less liquidity, markets can tend to be wider, less liquid, less not as much price discovery. And if you're good at pricing options and managing risk, there could be opportunities in places where markets are illiquid and there's some trading going on. So 514 stocks out there have some trading volume. They're only listed on one exchange, and that could mean that there's not a lot of competition, and that there may be opportunities there to take advantage of where there's less liquidity, and by adding to liquidity, there may be some theoretical edge in that. So then, we have this pie chart here, and this kind of further breaks down the trading volume based on sectors. So we can see that the consumer cyclical sector, wait, where's that? Up here was 13% of all the trading volume. 22% of the volume was in the technology sector. Okay, so so you could see even by sector, there's a lot more order flow going certain sectors more than others. 27% of the volume were broad-based ETFs. So broad-based ETFs would be something like SPY that consists of stocks that are not a specific sector, because SPY has, technology sector in there, and it has financial sectors. So SPY would be something that's trying to measure a broader market. Well, QQQs would be in there too. So QQQs, they are kind of the technology sector, but at this point, QQQ has some of the biggest stocks. You have Microsoft in there, and Apple, and so forth. So this impacts the broader economy. QQQ's in there, IWM, 27.8% of the trading volume were in those types of securities. Okay, that represented the biggest portion of this pot. Okay, broad-based ETFs. Then we see that technology sector was 22% of the trading option volume. And to break it down a little bit further, let's keep going down. So we know the landscape. What is the trading volume landscape? How are people using these options? If we look at the breakdown by the type of orders and executions that are going in, 38% of the volume were in single leg trades, meaning buying or selling a call or put. 56% were multi-leg trades, so those orders were entered and executed as a multi-leg or complex orders, such as a call spread or a put spread, butterfly, anything that's entered in and executed that required an execution of more than just one option by itself, but it was entered in as a strategy. So you could see that volume, multi-leg trades, on Friday exceeded the single leg trades. More option volume was due to multi-leg trades than to single leg trades. And then we have this contingent, and contingent would involve another leg that's not only an option, such as stock. So if you create a strategy that requires a stock component, it would be contingent. Like a buy right would involve a stock component if you want to simultaneously execute stock and option at the same time. Or you could have a strategy where you want to maybe have a delta neutral strategy by requiring a stock component to reduce your directional risk. Well, that will be tagged as a contingent trade. Okay, 5% of the volume involved that. So what about the next thing is the maturity of the option. Are traders using options, and where the trading activity, where does it fall along the term structure in general? Are people mostly trading monthly options, leaps? Are they trading short-term options? how are they trading these options? What are they doing? And here we could see that the trading volume, 48%, were in options that expired 5 days or less. They had less than 5 trading days to go, which shows us that almost half of the volume are concentrated on very short-term time horizons, right? In fact, in 5 trading days, these options will expire. Okay, so a lot of the trading volume is in the very short term. And if we wanted to kind of break down the days, like 6 to 10 days, 11 to 30, we could kind of see how the rest is distributed. So we have, 6 to 10 days, 16%, up to 30 days, 15%, from 11 to 30, and so on. The longer terms, 8%. So this is the breakdown of, where the option volume is flowing in terms of term structure. Then what about, like, what type of traders are participating, responsible for the volume in the options trading? Because we could have different types of traders. We could have very small retail traders. We could have very large institutional traders, somewhere in between there. So how is that volume broken down? Who's utilizing these options and driving the trading activity? So here we have a breakdown by trader type, where we analyze the trading volume and assign it the most likely types of traders that are executing these trades. And here we see that the small retail, the very small retail trading volume, we have it at 17%. The retail investor that is not, super small, but still looks like a retail investor, was 28% of the volume. Then we have more of the kind of professional type investors that are doing trading volume that are more in line with, bigger accounts and involve more expertise, because there are certain types of trades and stuff, activity, that you would have to get approved. So keep in mind, when you're trading options, there's always some type of approval.
AD? Hey everyone, we've had a little bit of an issue. Not exactly sure. We've lost D. Let me call him back, see if we're going to get in. Give me a second.
This
Oh, here we go.
Will, did you say something?
Yeah, you were bouncing in and out.
Okay.
I don't know if it was your local connection or whatever, but you're back now and on. So about the last 30 seconds, you disappeared. So you're back.
Okay. I don't know where I stopped at. So I was looking at the single leg trades and the distribution of those single leg trades by trader type. Okay, and this was shown based on our analysis. 17% of those trading volumes were in the small retail trader types. 28% were Still retail, but in a little bit larger size. Then we had 28% that we would consider more professional type of traders because of the size and types of trades that they're doing, that you would need more approval, from a brokerage firm to do those types of trades. And then you have your institutional trades would be very larger, unusual types of trades that represented 28% of the volume. Then here we break down the single leg trades. So these are single leg trades only. Okay, down here. So if we looked at the single leg trade out of these over here, what is the breakdown of those? Okay, so these are excluding multi-leg and contingent trades. So 52% of them were in the calls, 48% were in the puts. And we could see there, if we just look at the calls alone, 55% of those were in options that expire 5 days or less. Same thing with the puts. These are the breakdowns by maturity. So very similar, distribution between calls and puts. It's not like we see a lot of calls in the shorter term and then a lot of puts trading in the longer term. They're very similar, distributed based on maturity. And then when the calls trade or the puts trade, what we want to see is what are the kind of strikes or moneyness or people targeting. So at the time of trade, are they looking at the money options? Are they looking at out of the money options, in the money options? So how's that distributed? And here we see that at the money options in the calls were 45%. At the money options were 50% in the puts. So when they entered in those trades and executed them, or when those trades were executed, those are very close to where the at the money options were, meaning that the strike prices are closer to where the stock price is trading. Okay. In the money represented a smaller portion. So these would be options that are already in the money. So in a call, the stock would be way above where the stock price is, and in a put, the stock would be way below the strike price. And then here's the out of the money options. So the out of the money options would be like wings or tails. So 53% of the volume in the calls were out of the money calls, meaning that the strikes were further away from the stock price. And in the puts, 40% of the volume were out of the money, meaning the strikes were below where the stock price was at the time of the trade. So now we kind of get a feeling for that distribution of volume, based on, sectors and security types, based on historical averages, concentration of volume, the breakdown of the volume by trade conditions, days to expiration, trader type, and moneyness between calls and puts. So, I'm going to stop right there because I think we gave it a pretty good overview.
That was great, D. Awesome job. Thanks so much. Let's hope everyone can get out and be safe today in these markets. It's very volatile out there. Remember to like us, follow us, thumbs up on YouTube. Great job, D, as always.
Thanks, Will. Thanks, everyone. Stay safe out there. Have a great trading day, and we hope to see you tomorrow.
Trade in peace, chameleons. Everyone have a great day. Bye-bye.